Hey, it's Matt from Financial Sense, the #1 accounting practice management software. And while you're busy running your accounting firm, you may have missed the latest news happening in the industry. So that's why we're back with the second episode of the only show that asks the question, what's new in accounting? First up, let's talk about whether there is truly an accountant shortage and what some big firms are doing to counteract it. According to CPA Practice Advisor, the United States is experiencing an accountant shortage that's impacting the workload, demand for, and burnout of CPAs across the country. For some states, the ratio of residents to accountants continues to grow disproportionately, with Nevada having only 1.75 accountants for every 1,000 residents, and it shows no sign of slowing down. So what's happening? Well, it seems like there's a vortex of a few different factors, including a wave of retirements outpacing entries into the industry, and the cost of CPA certification being a deterrent to a young workforce. But most of all, it seems as though anxiety and worries around the profession are keeping people away. That includes a perception of massive workload, job stress, and the coming of AI that some see as potentially replacing a large number of accountants. So what we're seeing are the signs of accountant population declines, and that's putting on more pressure on the remaining accountants at many firms. In addition, the hiring cycle for CPAs is longer than non-CPA employees in most firms, with open CPA roles averaging 73 days to fill, which is almost twice as long as other roles. Thankfully, firms and the accounting industry as a whole aren't just going to take it. They're working on boosting the health of accounting in a few different ways. Maybe the biggest change to counteract a growing shortage is a new path to becoming certified in most US states. Some states have decreased the amount of experience needed before pursuing licensure. Credit hours are being decreased from 150 to 120 in most areas, and the American Institute of CPAs and the National Association of State Boards of Accountancy have approved a new path to licensure. Now, candidates can be eligible with a bachelor's degree, 2 years of professional experience, and passing the CPA exam. Still, some of the biggest firms in the world, who rely on consistent hiring to keep up their workload, are worried that prospective CPAs are getting scared away from entering the industry. So their solution? Bonuses, bonuses, bonuses. Ernst Young recently announced that it would be doubling their CPA bonus for early career new hires who passed all 4 parts of the CPA exam within 1 year. That brings the bonus up to $10,000, marks the first increase in their bonuses in more than 20 years. Likewise, PricewaterhouseCoopers has also doubled their CPA exam bonus to $10,000, effective June 1st. I think what's important to note here is that while the barrier to entry has been lowered, the demand for true skills and experience will always be there. So if you've been considering becoming a certified public accountant, there's more incentive than ever to pursue your license and find support in firms that are hungry for fresh talent. Next up, let's take one last look back before moving forward. Now, we all know that tax season is a huge challenge for every accountant, bookkeeper, and anyone remotely involved with some sort of tax form. But it's important to look at all the actual toll of that work and stress so that people can better understand what firms really go through every year. And according to a recently released survey from CPA Practice Advisor, the majority of accountants experienced a serious negative impact on their lives during that always dreaded time of year. One of the really interesting aspects of the survey is that it used the Tax Season Survival Index, very specific, to measure the personal and professional impact of tax season on a total of 438 U.S. accountants who took the poll. Specifically, survey respondents were scored on a scale of 0 to 100 regarding the impact on their health and lifestyle, with 0 being absolutely no impact at all, and 100 being a complete disaster. And after compiling all the responses, the average accountant scored 55.6 out of 100, putting 78% of them in the survival tier or worse. Sure, you made it, but it was a struggle. On the personal side, 44% said they had strained relationships that needed repair after tax season, and 50% had caffeine withdrawals after many days of lots of coffee to make it through. On the professional side, 58% dealt with late documentation from clients, and 70% either made errors or narrowly missed making them during the final 48 hours of tax season. Not surprising, every firm was scrambling and handling tons of work with the deadline looming. Other major issues that accountants experienced included 1 out of 2 getting less than 6 hours of sleep a night during busy season. Half put their stress level as at least 8 out of 10 in the final 72 hours before April 15th, and the most common pressure points they experienced were deadline week panic, client chaos, and life suspension. So yeah, if you feel like you had to put your life on pause to get everything done at the last minute, you were definitely not alone. Interestingly, larger firms experienced less stress than small firms. So what that likely points to is that the total amount of work may not be the cause of all this stress, but instead the systems being used to handle that work. Now, there's no miracle solution to tax season. It'll always be there because of how much work needs to get done on a limited time frame, but I think that the ways in which firms document and run their processes, ensure clients give them everything they need on time, and how workflows are handled can alleviate a lot of unnecessary stress. If these stressors from the survey feel familiar, and you know what caused the biggest problems during tax season this year, now is the perfect time to make a change. You got plenty of time. Okay, let's take a quick break. Did you know that accountants have been known to fight crime on occasion? No, I'm not talking about being a mild-mannered accountant by day and a mass superhero by night. What I'm talking about is how Al Capone, maybe the most famous gangster in history, was ultimately taken down by accountants, not cops, detectives, or masked crime fighters. See, while Capone was a well-known criminal and the head of a crime syndicate in Chicago during the 1920s and early 30s, federal investigators couldn't quite get any charges to stick, no matter how hard they tried. That is, until federal agents realized that Capone's illegal activities but lavish lifestyle made it clear that the gangster was making a lot of money without paying any taxes on it. What's important here is that just a few years prior, a Supreme Court case ruled that illegally earned income was still subject to income tax. So, bing bang boom, in 1931, Capone was charged with 22 counts of tax evasion and 5,000 violations of the Volstead Act, which is prohibition stuff. Eventually, Capone was convicted of 5 accounts of tax evasion and sentenced to 11 years. And there you have it, the downfall of a seemingly untouchable crime king, all thanks to accountants. And for our final topic of the day, we're going to talk about the trends happening now that will impact the future. If I were to give the year 2026 a name, like some sort of cool, catchy way to sum up what it's all about for accounting, I might have to go with Merger Mania. In the last episode, I highlighted that many accounting firms and their executives were focused on mergers and acquisitions as a major strategy for staying successful and maintaining some sort of forward momentum, even when industry uncertainty was high and profitability was a challenge. If you can't beat them, join them, right? Well, there have been a lot of businesses that have put that philosophy into practice so far this year. The biggest recent merger? The state CPA societies of Maine, Massachusetts, New Hampshire, Rhode Island, and Vermont have all approved a merger that will turn them into the New England Society of CPAs, effective July 1st of this year. This was specifically approved by the boards and members of each previously separate society and is intended to create a stronger shared mission for this new CPA organization. And I can't help but think that anxiety around accountant shortages, worries about AI replacing jobs, and increasingly complex demands for accounting services are driving all sorts of businesses and other organizations to consolidate in order to improve the rights and well-being and the careers of their members. So good for them. According to CPA trend lines, another major factor in the spike in accounting mergers and acquisitions is the increased presence of private equity within the accounting world. As is the case in many industries, private equity firms want to turn accounting firms into platforms for continued growth and investment, with mergers being a fast way to make these smaller businesses into those opportunities. And if you look at the numbers, you can really see their impact. Within the first 4 months of 2026, there were 78 different accounting mergers in the United States, a huge increase from the 44 mergers that happened within the first 4 months of 2025. From small firms to big societies, all this merger activity means that the landscape of the accounting industry is changing rapidly. Who knows what it will look like by the end of 2026, and what trends are on the horizon for 2027, but one thing is for sure. Uncertainty isn't causing the accounting world to freeze and wait. It's causing it to start making big moves and fast changes. Numbers and money don't wait for anyone. They push businesses to make moves to stay profitable and ahead of the game. With so many challenges and opportunities, it can be easy to get lost in all the worries without seeing a way forward. But I want to talk to you a bit about how Financial Sense is helping accountants, bookkeepers, and CPAs. It's an all-in-one accounting practice management platform that's helping more than 10,000 firms manage their workflows, seamlessly collaborate with clients, and collect payments, and so much more. One feature that Financial Sense clients absolutely love? The client portal. Instead of communicating with clients and exchanging sensitive documents through email and unsecured messages, the Financial Sense client portal gives you a single, highly secure, professionally branded center for documents, requests, transactions, and so much more, all made possible with secure Magic Link technology, meaning clients never have to remember a username or password. With the Financial Sense client portal, you can easily request information and shorten the client chase with automated reminders while making it easy for your clients to upload information through the portal. It's just one of the many features from Financial Sense that's helping firms make the most of every day. Want to know more? Click the link or scan the QR code, and thanks for watching What's New in Accounting.